So, Liam, this is, to some people, a bit of a mixed bag. Clearly, interest rates are low. They are, by historic standards, quite low as it stands, and they weren't raised by as much as was expected back in September. And yet, to others, a 0.75 increase is really quite crippling and worrying. Where do you sit?
Well, I see all sides of this conundrum. On the one hand, a lot of people watching and listening to GBNews may live off their savings, and savers have got interest rates less than the rate of inflation for years and years. So we must always remember that lots of savers will be happy the Bank of England is raising interest rates. But many people with personal loans and particularly mortgages won't be. If the Bank of England does raise interest rates by 0.75 percentage points today, that's a big increase. That would follow the Federal Reserve in the US raising rates by 0.75% 4 times in a row, then that will increase the cost of a £200,000 mortgage. The monthly payment will go up by about £85 a month. That's over £1,000 a year. That's a big chunk of anyone's post-tax income, frankly, if you're living in the real world. And I listened to your conversation with Olivia Utley earlier, and I just wanted to add to that conversation. You know, people of your age, Tom, of Olivia's age, people of the older generation may say, the reason you can't afford to buy a house is because you watch Netflix and you eat too many avocado sandwiches and you're not as diligent and as prudent as previous generations. And that's absolute tosh. Even though interest rates are low now, the fact is, to buy a house, it's much, much more expensive, pretty much in all parts of the country. When I bought my first home in the late 1990s, Tom, the average house in the UK was 4 times the average income, right? The average home in the UK is now 8.5 or 9 times the average income. So younger people buying homes now with mortgages, they're much, much, much more indebted, right? So they're paying a bigger chunk of their income every month on their mortgage than their parents were back 20 or 30 years ago. So this idea that interest rates are low, they were 15% in my day, eat fewer avocado sandwiches, is complete nonsense.
Yeah.
And just to illustrate that, Tom, with mortgage rates at sort of 6.5% on average, which is where they now are, as the Bank of England raises to sort of from 2.25% to 3%, because, of course, the mortgage companies take a massive slice.
Yeah.
That's why they make so much money. At 6.5% basic mortgage rates at the moment, the average person is paying a third of their income on their mortgage, right? A third of their post-tax income. And that's exactly where it was back in the late 80s and early 90s when interest rates were 10, even 15%. So we've got to get beyond the headline interest rate and say that young people can't buy homes because they're fickle. The reason they can't buy homes is because we're not building enough homes, as I've been saying for many, many, many years.
And so how do we deal with what is likely going to happen today? Interest rates will likely rise by
definitely rise.
Definitely rise.
Well, I don't think they'll definitely rise by 0.75% or 75 basis points, but they'll definitely go up. And if they don't go up, then the pound will absolutely plummet.
Because the pound has also slid a little bit this week. It was $1.16. It's now $1.14 this morning, probably because the US Federal Reserve raised their rates yesterday.
That's right, which makes the dollar more attractive. And there's a kind of sense going round that because the economy in the UK is stalling, survey figures that came out earlier this week show our manufacturing sector. They're not official figures, but they're survey figures. Our manufacturing sector at its lowest ebb since the middle of lockdown, since the middle of 2020. So there's a sense that because the economy is slowing anyway, that should lead inflation to abate. Then maybe the Bank of England doesn't need to raise interest rates by 0.75. It may get away with another 0.5 percentage point rise. That's why sterling has come off slightly, because, of course, if you have a higher interest rate, money that you park in dollars and pounds, if you're an international investor, will get a higher rate of return. Yeah. So it's either going to be 0.5 or 0.75 today, and savers will cheer, but many people, about 2.5 million households in the UK have variable rate mortgages, and around 8.5 million have fixed rate mortgages. There's 11 million mortgages outstanding in the UK. But the point is, Tom, many of those people on fixes, those fixes will end quite soon.
Yeah.
This is the problem. So almost everyone who has a mortgage at some stage will have to face a higher interest rate. And we can't say too often that even though interest rates are historically quite low, because home loans these days are bigger, because house prices are so much more expensive, the burden of the debt is just as heavy, if not heavier, for the younger generation, families trying to make ends meet, as it was in the late 80s.
And those little rises
and the early
today
90s.
are equivalent to much bigger rises back in the
Absolutely,
late 80s.
because
Well,
the stock of debt that people are servicing is bigger.